it takes some time to get people comfortable with, especially, again, the clients that I deal with that are very hands-on and been in these neighborhoods for a long time, comfortable buying something out of state, buying something they don't really touch, less management intensive. It's hard to it almost feels like as a broker, you're selling snake oil to them until you really educate them on the opportunities.
I'm curious, what would you find the biggest frustration is for a 1031 exchange for those that are selling, right? That you've come into, and then let's just talk about a few successful ones and what's really worked out for you and your clients.
I think the biggest hurdle with my clients in a 1031 exchange is figuring out what to buy. So at Matthews, we have Matthews Real Estate Investment Services started in 2015, and really it was built around retail and triple net property. So we have an incredible resource of triple net assets throughout the country. And oftentimes I present those assets to owners to see if it makes sense. And it takes some time to get people comfortable with, especially, again, the clients that I deal with that are very hands-on and been in these neighborhoods for a long time, comfortable buying something out of state, buying something they don't really touch, less management intensive. It's hard to it almost feels like as a broker, you're selling snake oil to them until you really educate them on the opportunities. So that's probably the biggest challenge, is getting them comfortable with, one, selling their asset, and a lot of the times their identity is within that asset because they run their business, and then two, getting comfortable with the whole 1031 exchange process and what you're going to buy. But I've had a ton of success. For example, I sold a warehouse in South Brooklyn. The person decided to sell because the tenant was leaving. Taxes were continuing to increase on the building. They weren't making any money, and the building needed a ton of work. So instead of putting probably $400,000 worth of money to get that building back up to speed and rent it, again, this person inherited the building about 3 or 4 years ago. They decided to sell the building, and they bought a KFC in Kansas City. They doubled their income, no management, or decreased their management responsibilities. And those are the type of transactions where you find success. I've also just had people where they said, you know what, I really just want to enjoy life. I've been working incredibly hard for the past 30, 40 years, where they'll buy their dream home or a really nice condo where their kids are moving to in Florida, rent that condo out for 2 years, and then eventually live in it, and maybe pay some of the capital gains. So those are the type of situations that I often deal with.
Yeah, I love all of that. That all makes sense. I'm curious, connecting the dots on a couple other pieces here. And sometimes I feel like the broker industry misses this a little bit. By the way, I started out at Marcus and Millichap in 2006, helping people buy and sell multifamily properties. My background, I grew up in the real estate industry. So I love 1031 exchanges, but sometimes I feel like it doesn't solve some of the key things. And one of the biggest ones is estate tax, right? The death tax. We've been taught the stepped up basis, drop until you swap, swap until you drop, and then kids get a stepped up basis and you're tax free. Well, the rest of the story is your capital gains tax free, or the kids are, right? If it steps up, if they sell at that given time and it's the same price. But what they don't talk about is the estate tax or the death tax. And so some of these clients that have owned for 10, 20, 30, 40, 50 years, and if their estate is greater than 12 million married essentially as of 2026 or 6 million single, their kids are going to have to sell that asset within 6 months or refinances or do something to offset the 40% debt tax. And this is brutal, right? And so states like New York, New Jersey, California, it's a massive amount of appreciation for people who've built this. And now they're going to get crushed with the state tax. And the 1031 doesn't solve that. Number two, the 1031 exchange, you have an old depreciation schedule. So one of the best reasons to own real estate is to have the depreciation offset the cash flow. We call this tax flow, right? It's a beautiful thing. But guess what? Once you own industrial or retail for 39 years, it's fully depreciated. And or if you do a 1031 exchange, the old depreciation schedule travels. So although you might get a better cap rate and a better ROE, your I guess your ROT, your return on tax flow, is still lower, right? Because the old depreciation schedule traveled. And so you need a way to solve the death tax, and you need a way to get a new depreciation schedule while still being able to buy real estate. This is part of why we went all in with something called the Deferred Sales Trust and helping people build what's called a capital gains tax exit plan that's beyond the what we call the blockbuster 1031 exchange, and give them the Netflix Deferred Sales Trust, which gives them the ability to be retired, to be active, to get new depreciation schedule, to eliminate the estate tax. And sometimes, by the way, we get that saying, it seems like what you're selling is snake oil is too good to be true. And yet we just keep closing deals across the country to help people understand what this thing is.